Hello, good morning, and you're watching Market Cafe on ET Now with me, Vinny Motiwala, along with me is Harsh as well. Harsh, a very good morning to you as well. And obviously, big news coming in from India, at least on the World Cup front, right?
Well, yes, table toppers, or rather almost table toppers because we are just behind on the NRR, but a very solid performance, one more very solid performance by India, bundling them out below 300 again and chasing it down how, Vinny?
Absolutely, surely that's something that's a very remarkable win coming in for India yesterday, and obviously being persistent on that front. So yes, keeping an eye on that because Kohli not only guided India to the victory but also secured a century during his innings, and with this win, India is all set to take on New Zealand in their upcoming match in Dharamshala, scheduled on Sunday as well. But on that note, that's all about the world of cricket and everything related to World Cup. Let's get started with looking at what the global markets actually did in terms of a handover that we got. When you look at the US markets, nothing exciting on that front. Whether the Dow Jones down almost 0.7% in trade, S&P 500 too is down almost 0.8% in trade, and Nasdaq too down almost 1% in trade. So clearly we saw some pressure coming in terms of the US markets as well. 10-year yields also have remained near the 16-year high level. So that's a concern coming in on the yield front as well. As of now, when you're looking at the US 10-year yield also, we're seeing pressure coming in. And as of now, when you look at the stock futures, they too have slipped given the 10-year yields are currently at near and at the 16-year high levels as well. So yes, pressure clearly coming in terms of that as well. What also we're tracking is that seems like the US market seems like they will be on track to actually report some losses even on a weekly basis when you look at the US market. So that's also a concern coming in because clearly this week we had seen pressure coming in on in the US markets, and because of that we've seen Indian markets also a bit woozy in trade as well. Now what also is coming in terms of commentary is that Federal Reserve Chair Jerome Powell was speaking at one of the events where he emphasized a cautious approach to the monetary policy, indicating that the central bank is ready to raise interest rates if economic growth continues unabated, and obviously that's a concern, and because of that there's fear coming in on that front, and that is why we saw a jittery move coming in the US markets. Now let's look at what the European markets did as well. They do close before the US market. So when you look at a DAX, FTSE and CAC, all of them were subdued in trade. DAX and FTSE were seeing a decline coming in, closed in the red. CAC closed a bit unchanged in trade, and obviously European stocks closed at the 7-month low. London Exchange limited its trading after they saw the incident taking place as well. And obviously the Pan-European Stock 600 index provisionally closed 1.16% lower as well. It's the lowest that we've seen coming in since March 15th. So yes, keeping an eye out on that. European markets fell for the third straight session when you look at it, as they assess the impact of the crisis in the Middle East as well as the earnings and economic data were pouring in as well. So yes, that's how the global market is looking like, Harsh, as of now as well. And that's something that we're watching out for because as of now, Gift Nifty is indicating a muted start for the Indian markets as well. But Harsh, in terms of commodities, what is crude doing? How is that moving? Because that also indicates a bit of a surge. When these crises occurs, we always see a surge coming in crude prices. Does that happen even today?
Well, yes. In fact, you've seen an uptick on crude. Surprisingly, because Vinny, last week as well, we did see that uptick, but it was led by the Israel-Hamas Middle East conflict, which was playing out over there. But again, we've seen an uptake on crude this week, and at least at the moment, we're seeing crude which is up around 1% or thereabouts as we speak. You're seeing WTI just above the $90 a barrel mark, and you have Brent above the $93 a barrel mark. So political tension really leading to that bit of a spike on crude, and crude settling above 90. Of course, that will further push or rather pressure inflation worries going forward as well. But at the moment, it's largely seems to be temporary, largely due to the Middle East tensions that are piling up.
Absolutely. Middle East these tensions that are piling up, and that is something keeping everything on their toes as well. So that's something that we're watching out for as well. But let's look at the events that will be happening today in the domestic market as well. What you're watching out for keenly is the RBI monetary policy meeting minutes will be coming out. The Indian loan growth and deposit growth will be something that we're watching out as well. India bank loan growth as well as deposit growth. And earnings, whole host of earnings expected to come out today. And on the Nifty, we have JSW Steel that will be reporting its numbers. Other than that, we have Poonawalla FinCorp, L&T Finance, then we also have K Fintech, Just Dial, Hindustan Zinc, important one to watch out for as well. And other than that, Century Textile, we have Glenmark Life Sciences, JSW Energy, Kajaria Ceramics, as well as 197 Communication, which will be reporting their numbers as well. Now, in terms of some of the recently listed IPOs, the lock-in period opens up for Sami Hotels as well as Zaggle, as well as in terms of Saturn Credit, we're watching out for a fundraising proposal that they will be discussing in a meeting today. J&K Bank too will be considering a raising of equity as well, and Spandana Smoothie is to consider and approve issue of NCD, so keeping an eye on that one. In terms of IPO actions, we have IRM Energy that closes for subscription today, so keeping an eye out on that. Those are some of the important events that will be happening this day, and we're keenly watching out for most of them today, and stocks also in trade as well.
Right, Vinny, one more piece I'd like to mark out, Vinny, is the 10-year bond yield on the US 10-year rather, on the US 10-year bonds. You're seeing 5% on the US 10-year bonds. That will obviously keep markets a little bit worried as bond yields remain elevated, and that's keeping markets worried as well. But let's quickly move on to the geopolitics side of things. Amid the rising global protests against the attack on the hospital in Gaza, US President Joe Biden is looking to ask the Congress for urgent budgetary allowance to send support to its critical partners, including Israel and Ukraine. Remember, the Israel-Hamas war has entered the 14th day, and Biden has just returned home after a strong show of support to Israel. As feared by experts, Israeli Prime Minister reiterated that the conflict with Hamas will not be short-term in nature. At least 3,785 Palestinians have been killed in the Israeli strikes on Gaza since Hamas's 7th October attack inside Israel. Citizens continue to await the arrival of 8 trucks promised in a deal struck by Biden as electricity, water, and essential supplies run short.
And from the Fed side, we have US Fed Chair Jerome Powell who reiterated that the central bank's commitment to moving forward carefully with further rate moves. In a speech, Powell added that the central bank might need to raise interest rates more if economic data remained hot. He made a case for a tougher borrowing condition to control inflation amid strength in the economy and the tight labor market is there. But added that the rising bond yields could mean less need to hike rates, and pointing to the tensions in Israel and Gaza, he said that geopolitical tensions pose a key risk.
Well, he's in an unenviable situation there, Vinny, but let's quickly move on. Staying with the US, the weekly jobless claims fell to a 9-month low last week, indicating a tight labor market. As the Fed chair indicated, the US saw 198,000 jobless claims, lower than expectations. In more economic data, sales of previously owned homes fell by 2% from the previous month as well.
And staying with some bit more of the macro news that we have, Japanese consumer inflation grew slightly more than expected in the month of September as food prices remain elevated. While core inflation remained near 40-year peak, the core inflation print also exceeded the Bank of Japan's 2% target for the 8th consecutive month, challenging the central bank's commitment to ultra-ease monetary policy.
Right, and after Ford and General Motors, Japanese car giant Toyota has also inked an agreement to adopt Tesla's EV charging technology from 2025. The Elon Musk-led company's superchargers are close enough to become the industry standard at the expense of the rival combined charging system.
Okay, that was all the global news flow we had, top global headlines on the show as of now. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere because we'll be back with more domestic news after this break. Welcome back, and you're watching Market Cafe on ET now. Let's look at what the Asian markets are doing this morning as well. And given the negative handover that has come in from the US markets, where you look at the Hang Seng, that's down almost 0.5% in trade as well. Shanghai too not doing anything exciting this morning, trading with a negative bias as of now. Let's look at what's coming for Japan's Nikkei. That's down 0.6% as well, while Kospi 2 is trading in the red. So nothing exciting in terms of what we see coming in for the Asian markets as well, especially the comments that have come in from Fed Chair Jerome Powell. Also, Japanese inflation, that's seen a bit of a concern, and that is what is keeping the Nikkei also a bit on the negative bias side as well. ASX 200, that's an Australian index, that too is down and out in trade, down almost more than 1% as well. So when you look at the handover, because we've gotten from the US markets, even the numbers that have come in for the Asian markets are a bit subdued. And as of now, what is indicated in terms of the GIFT Nifty also, we are indicating a negative start for the Indian markets as well. So Harsh, that's how the setup is looking like as of now for the Indian markets. One more dull day is what we are expecting here.
Well, absolutely. Dull day at least right off the bat. You're looking at negative global cues coming through at least at the moment. But let's quickly look at what we have lined up for you for the rest of the day, or rather for over the next couple of hours. First off, we have the CEO of Tata Communications to talk to us about how earnings have played out for the company in this quarter. Mind you, Tata Com declared its numbers late yesterday evening. Quickly moving on, we also have the CEO of Metro Brands coming in at 9 a.m. Nissan Joseph. He's going to be again talking to us about the numbers for Metro Brands and what can we expect going forward. After which we have Nilesh Shah of Kotak AMC to talk to us about markets. Of course, that's going to be a very interesting conversation. Immediately after which, we at 9:30 a.m. we have Sumant Katpalia, who's the MD CEO at IndusInd Bank. Again, going to talk to us about numbers. IndusInd was buzzing in trade yesterday. We also then have Nitin Rakesh, who's the CEO at Mphasis, plus Manish Duggar, who's the CFO, both of whom are going to talk to us about the numbers for Mphasis. IT, of course, in focus on the back of earnings. At 10 a.m., we have the MD CEO of Equitas Small Finance Bank, PN Vasudevan, who's again going to talk to us about numbers. Equitas disclosed a solid set late yesterday, post-market. And we have also, lastly, Anil Rai Gupta at 10:35 a.m. of Havells India, who's going to talk to us again about earnings. So a whole host of earnings in focus today, and a whole host of managements coming on the back of those.
Okay, let's move on. The big fat Indian wedding just got fatter, and according to industry estimates, a staggering 4.25 lakh crore will be spent across India this upcoming wedding season. With over 35 lakh weddings in November end to mid-December, hotel owners, jewelry brands are expected to make a killing. Now, Bhavya Dua, my colleague, is here to take a look at this Band Baja Bharat business. What's happening there? Let's take a look.
India's wedding season is back. And how? The Confederation of All Indian Traders, CAIT, is expecting businesses to earn 4.25 lakh crore rupees this wedding season, which is the highest ever. This estimate comes after CAIT expects a whopping 35 lakh weddings to be solemnized in a span of just 23 days between 23rd of November to 15th of December 2023. Now, around 3.5 lakh weddings in these 23 days are set to take place in Delhi itself, which is likely to generate business worth rupees 1 lakh crore. Let's take a look at the estimated spending patterns that can be seen this wedding season. Now, about above 6 lakh weddings will have an estimated expenditure of rupees 3 lakh per wedding, and in about 10 lakh weddings, the cost per wedding will be around 6 lakhs. 12 lakh weddings will cost about 10 lakhs per wedding, and another 6 lakh weddings will cost 25 lakhs per wedding. Around 50,000 weddings will see a spend of 50 lakh per wedding, and another 50,000 weddings to see a budget of whopping 1 crore or more. But what are people spending so much on?
It was known only Jaipur, Udaipur and Goa were destination wedding hub. But now this year it's almost more than 10 to 12 wedding venues have come up, like Cochin, Bangalore, in fact, any destination like Masuri, anywhere the property have 100 rooms, it's a destination wedding destination now. So all tourism, all hotels who have more than 100 rooms are growing up very fast.
Well, apart from these cities that are going to witness such a huge boom because of the wedding business, who else is going to benefit from this bonanza? This upcoming wedding and festive season will lead to an increase in demand for jewelry, saris, furniture, ready-made garments, footwear and other accessories. Also, big listed companies like Titan, Kalyan Jewelers, Metro Brands, Bata India, Raymond, Wellspun, Godrej will all be enjoying a share of this rupees 4.25 lakh crore pie. Furthermore, a wide range of services including tent decorators, flower arrangements, crockery, catering, travel services, cab services, photography, videography, music and even event management are anticipated to contribute to this multi-trillion rupee industry.
Right. So, Vinny, how many weddings are you going to go for this wedding season?
As of now, I have not gotten any invites, so yes, hoping to get some of them at least, and going and eating some wedding food and enjoying someone else's money then.
Right. So that one's going to be, weddings are going to be in focus as well as we approach the November-December time. But
welcome back, and you're watching Market Cafe on ET. Now let's get more domestic, and now for consecutive months, we've seen GST collections that have crossed rupees 1.6 lakh crore. Now, the government is looking at another month of record collections under the banner of goods and service tax. What is the reason behind this, and how high could the collections go? ET Now Sumit Chaturvedi files a report on this. Let's go across.
After registering record high number of GST in September for fourth consecutive month, in October, sources are telling us that this number could go further up. It can go to 1.7 trillion rupees. In September, it was 1.6 trillion rupees. That was the number. Well, reasons could be many. First of all, there is a better festival spending, also uptick in rural demand, also infrastructure spending. All these could be the reason why the GST numbers could go up further. Overall, GST numbers are in line with nominal GDP figures, which is above 10%. Later on, also we understand that the 10% growth was in September, and the growth can continue for many more months. So it's a good news as far as GST collection numbers are looking like they are going to go up further. I'm looking at many factors. GDP numbers are going to go further up.
Right. Thanks so much for that, Sumit. Let's quickly move on. No price hikes expected in the festive season. That's the word coming in from the Food Secretary, Sanjeev Chopra. Talking to ET Now, Samir Dikshit, he says prices of essential commodities have stabilized and the government has enough supply of rice and sugar. Listen in to some of his comments.
Sugar, the stock position as of now is about 50, on 1st of October was 57 lakh tons. And that is enough for 2.5 months of our domestic consumption. Okay. Over and above that, we are going to get fresh stock of sugar from the crushing which has started in some parts of the country. Okay. And will be in full flow by the beginning of November. So fresh stocks will start coming in November, and the present stocks are sufficient for 2.5 months. So I don't think there should be any issue with regard to the availability of sugar, and the prices should also remain stable.
And the rice part?
Rice we have with the FCI, the stocks are about 210 lakh tons. Rice, we saw that there's been some bit of an uptick in the prices. On an annual basis, the rice has been about 11%. But the policy that the government has announced in the recent past with regard to the export regulation, I just showed you the graphs as to how the inflation, which would have been probably close to 18 to 20% in rice, has been kept down to about 11 to 12% only because of these policies of the union government. Okay. And now the fresh harvest is coming to the market. The milling will also be commencing very shortly. So we can expect that the prices of rice will also come down very shortly.
Just two things, sir. One is regarding the sugar export quota or for the next sugar season. Currently, where we are standing, what sort of discussion is taking place with the Agriculture Ministry?
The first advance estimates of Agriculture Department are expected anytime now, and once these estimates are announced, we will have a fairer idea of what is the expected sugarcane production, and then we can do the back calculation to see what will be the production of sugar in the country. And from there, we can take a call as to what will be the availability of sugar for different purposes. So as you're aware, consumption of the domestic market remains our top priority. And we would also like to divert some part of the sugar production for ethanol.
Okay, let's move on and talk about Hindustan Unilever that reported its numbers yesterday post-market hours. When you look at it, revenue and profits came in line, margins slightly above, but volume growth, that was a miss coming in for the company. Volume growth was just at 2% versus expectation of around 4%, so yes, below the street estimate. Now, in terms of highlights that came in also, yes, margin expansion was there despite that ad spends and promotion spends being higher. Despite that, the company actually saw a healthy margin expansion this time around. In terms of commentary on the home care segment, beauty personal care segment, they saw mid-single digit volume growth over there. Food and refreshment was a bit under pressure in terms of volumes, and the company said that the mass products continues to see competition from smaller players, products like maybe loose tea players. That's where they saw competition. Also in terms of detergent, that's also where they saw a bit of a competition. So yes, that's a concern that regional players still continue to see in terms of doing better than branded companies when you compare it for the mass products as well. Company highlighted that they expect to see volume recovery coming in gradually. They want to focus on competitive volume growth going forward as well. And demand trends have remained stable largely. That's what they're highlighting. But let's also go across to the management and listen into what more they had to say in terms of the recovery that is coming in on the rural front as well.
What we're seeing for rural, the demand is recovering gradually. And of course, the point still is that the growth that we've seen now of roughly 7% volume in rural market, it's on a base of a 9% decline same period last year. So if I look at a 2-year basis, there's still a marginal 1% decline in rural volume, which means the markets are not yet fully recovered. So that's one. But what is really helping this point in time, the recovery, the point Rohit mentioned earlier, inflation moderating gives more disposable income to rural consumers. That hence is leading to recovery of demand, though gradually. We have seen the real rural wages, which were negative, have now come into some positive territory. That's a good news. We have seen that the government expenditure to support rural economy had been increased a few years back, and that has been maintained at a high level. That is helping rural recovery. An equally higher amount of capex, which is getting spent both in last budget and the current budget put together, that is also supporting overall rural income. So there are many factors which are, let me say, in favor of rural demand recovery, albeit the recovery is gradual. And of course, to Rohit's point earlier, we have to watch out in terms of monsoon. Monsoon has been uneven, and we know that we are ending the period with a lower amount of reserve level as well. So we have to see what impact it plays out on the Kharif output now and Rabi sowing later point in time. Overall, we do remain cautiously optimistic and expect demand to continue to recover gradually. So that's on rural demand. And if I just probably answer your question on competitiveness, I mentioned in my opening remarks as well that overall, we have seen small players when commodities do come down, and we have seen at mass end more amount of competitive intensity as more players now are participating in the market. That happened in tea to start with, where the loose tea prices came down, premium tea got inflated more, and almost the commodity decoupled. And hence we saw more demand of consumers down trading, and hence we saw that loose tea players doing much better business. That was one element which was happening. Second element on competitiveness was again in mass end in, let me say, detergent bar. Very similar as commodities came off. We've seen that element of the market growing faster than large players. So in pockets of those certain geographies at certain price point, especially in mass end, we have seen competitive loss. But overall, the point we mentioned earlier, that on a 2-year basis, we have strong market share gains. Even on current year, we have market share gain, and our volume growth in terms of competitive volume growth in more than 75% of the business, we are gaining volume share as well.
Okay, that was the management of HUL. But let's move on and talk about ITC as well, because they came out with their numbers late evening yesterday. When you look at it, you could say largely inline set of numbers. Now, obviously, when you look at it, volume growth was on the bit of a positive side, was slightly better than what we were expecting and the street was expecting as well. Almost in line to slightly better. So what the volume growth came in at is around 5 to 6% is what the inferred number comes in for the volume growth. Revenues, profits in line. Margins were flat on a YOY basis, so keeping an eye out on that. Cigarette EBIT, that's something that was exciting as well, because cigarette EBIT, yes, we have seen a growth of around 8%. FMCG EBIT has seen a strong growth as well. Now, even ITC is highlighting similarly what HUL highlighted is that they are seeing competition coming in from the smaller players even now, as commodity prices are deflating, so that smaller players are now coming up and they are facing a bit of a competition on that front. FMCG, hotels and cigarette business, that has done well on the revenue front as well when you look at it, given that there was a high base. Despite that, we're seeing a growth coming in here. Agri and paper continues to be a bit under pressure, but agri business, the value-added product exports, that's seen an increase coming in on a year-on-year basis. So those are the key highlights that have come in terms of the hotel business. That has continued to do well. Demerger is in the same timeline that is there, the scheduled timeline. It's on the same lines as well as of now. So not a delay that is coming in on the hotel business as well. And obviously, hotel business, they've seen strong ARRs that is supported by even G20 was supporting, plus travel trends have supported the growth in hotel business as well. So that's how ITC's numbers were looking like as well, Harsh. Largely we could say HUL, ITC, both of them were in line. For ITC, yes, volumes was a bit of a positive surprise, or something that could maybe support a slight bit of a jump up, but then maybe could settle in terms of the stock move as well.
Right, that's the thought process coming with regard to both FMCG majors. Have to wait and watch as to how they move in trade. But let's quickly slip into another short break. After this, we'll continue to be more stock specific. Right, as promised, let's quickly go stock specific. Welcome back. JSW Steel all set to report its Q2 results today, with EBITDA expected to be up by around 2%. Ashesha is here joining us with all of what the street is really penciling in.
Well, yes, we are expecting steady set of numbers from JSW Steel this time. This is on account of lower realizations, on account of lower steel prices that the company experienced in the quarter gone by. Although EBITDA per ton is expected to increase by about 15% on a quarter-on-quarter basis, and that is on account of lower raw material prices in the second quarter. As far as numbers are concerned, consolidated revenues are expected to come in at about 42,100 crores, flat on a quarter-on-quarter basis, while margins could come in at 17% versus 16.7% in the previous quarter, up by about 30 basis points sequentially. As far as other internals are concerned, as I mentioned, realizations are expected to fall, and that is because steel prices declined by about 2 to 5% on a sequential basis. Raw material prices too were on the lower side, so coking coal prices were down $50 per ton sequentially, while iron ore prices were down by about 400 rupees per ton on a quarter-on-quarter basis, and hence EBITDA per ton could jump by 15% sequentially. So yes, sequentially we are expecting EBITDA per ton to jump on account of lower raw material prices. And as far as key monitorables are concerned, management commentary on full year FY24 production and sales guidance and raw material pricing outlook will be keenly awaited.
Okay, Ashesha, thank you so much for that. But, do stay on with us, because it is a disappointing set of numbers that came in from UBL for the quarter gone by. What is ailing UBL and what is expected for United Spirits? Ashesha, please tell us more on that.
Well, yes, Alco-bev stocks will be in focus, the likes of United Breweries and United Spirits. United Breweries, on the back of its results that it reported, weak set of numbers. Margins were a key disappointment this quarter. Company reported steady margins on a sequential basis, 9.8%, but this is much below what the street was working with. Street was working with a margin figure of about 10.6%, and it has come in at 9.8%. So key disappointment as far as the margin figure is concerned. Volumes, although, have risen by about 7%, and the premium segment has seen a growth of about 10% in the quarter gone by. As far as the management commentary is concerned, they say raw material prices are softening, but raw material prices continue to remain volatile. Analysts say that barley prices did come off in the quarter gone by. However, the full impact of lower barley costs will get reflected only in the next quarter, and hence raw material prices could go down and gross margins could expand further in the next quarter. Apart from this, United Spirits will also be in focus, and that is because Pernod India reported its numbers. It was a weak set of numbers. It reported just 1% sales growth. Sales growth was impacted on account of adverse sales mix. However, analysts say that this will be a positive for United Spirits. Lower sales growth for Pernod India means market share gains for United Spirits, and on account of this news, United Spirits will also be in focus today.
Right. Thanks a lot for all of that, Shesha. We'll let you go on that one. Let's quickly also look at what all brokerage notes have come through in terms of key brokerage notes, and Vamakshi is going through all of those. Vamakshi, talk to us about the key ones.
Well, yes, let me first start off with DB Corp. Now we have a brokerage note that has come in from B&K Securities, and they have highlighted that the company's digital app is best in class. The subscription offering too has seen a very good uptick in their opinion. Now with limited competition as well as a massive customer base, what B&K Securities actually believes is that the company's digital foray could be India's NYT moment. There has also been a recovery in ad print revenue, and that is quite evident. So given all of those factors, B&K Securities has actually gone ahead and upgraded its rating on DB Corp from hold to buy. They've also gone ahead and hiked the target price to 383 rupees per share. Other than that, let's also focus in on IGL. We have a note coming in from Jefferies on Delhi's policy on cab aggregators. Now, this policy is in the final stages, and this could potentially impact nearly 30% of IGL's overall volume starting in FY25. In fact, they believe that the new GAs are unlikely to compensate for the slowdown in the NCR region. So, on the back of that, they've actually gone ahead and cut their EPS estimates for FY25 and FY26 by 7% and 9% respectively. They've also lowered the valuation multiple in order to factor a growing risk from EVs. So given all of those factors, Jefferies has gone ahead and downgraded its rating on IGL from buy to hold, and also cut its target price to 465 rupees per share. Lastly, let's also focus in on HSBC's India strategy on FII flows. Now what they have highlighted is that Indian equities could actually remain under pressure as FIIs turn net sellers, and this could be mainly on account of the sharp jump that we have seen in the US bond yields. Now they have analyzed nearly 21 similar episodes, and their findings indicate that the impact on FII flows is quite short-lived. The current outflow largely captures this, and they believe that the geopolitical risk is a key unknown, but if contained, FII flows could rebound as growth stands out, and the valuations for Indian equities look quite attractive. So given all of those brokerage notes, keep an eye out on DB Corp as well as IGL.
Okay, keeping an eye out on all the stocks on the back of brokerage note, but which are the stocks in focus on the back of news flow? Shesha is here with that list. Shesha?
Well, yes, first up, Zomato will be in focus on account of a block deal that is expected to happen today. SoftBank is looking to sell stake in the company. They are looking to offload 1.1% stake in the company, and the offer price has been fixed at 109 to 111 rupees per share. SoftBank held about 2.17% stake in the company, and they are now looking to offload 1.1% stake. So on account of this deal that is expected to happen today, Zomato will be in focus. Let's also talk about Natco Pharma, where the company has received Form 483 from US FDA with 8 observations for its Hyderabad plant. Negative news coming in, this counter will also be in focus. Let's talk about Atul Auto. Shareholding pattern is now out, and Vijay Kedia has increased its stake further by 6% to 20.9%. Vijay Kedia, remember, has been an investor for a long time, and now he has increased his stake. Keep an eye out on this counter as well. Let's also shift focus to a couple of earnings candidates then. Cyient reported a very strong set of numbers. On a sequential basis, revenues are up 4.8%. Margins have come in at 8.3%, lower by about 100 basis points on a quarter-on-quarter basis, while profit after tax has seen a jump of 6% sequentially. Sagar Cements, also very strong set of numbers over here. Revenues are up 24% on a year-on-year basis. Margins have come in at a whopping 10.2%. versus margins of just 1.3% that the company had reported same time last year. RVNL, on the back of an order win, will also be in focus. The company said that they've received letter of acceptance from Vadodara Division of Western Railway for an order worth about 240 45 crores. So on the back of this order win, keep an eye out on RVNL. And lastly, PTC India, this is on the back of sale of its subsidiary, where the board has approved the bid submitted by Messrs ONGC for acquisition of a wholly owned subsidiary, PTC India Limited, subsidiary that is PTC Energy. This has been done for an equity value of 925 crores. So on the back of this transaction, which will go through, this counter will also be in focus.
Right, thanks so much for all of those, Ashesha. We'll let you go on that one. But with that, we're completely out of time on this edition of Market Cafe. From Vinny, myself, and everyone who's put the show together, thanks so much for watching. Of course, stay tuned. The market to take the action forward.